Hello, everyone. Matt Clark, research analyst with Money and Markets, here with your latest Bull and the Bear podcast. Now, make sure that you are checking out our website, moneyandmarkets.com, every day for safe and profitable investment information. Chief investment strategist Adam O'Dell, as well as Green Zone Fortunes editor Charles Sizemore, and myself, the rest of our team. We work hard every day to make sure to provide you with the best information to bolster your portfolio. You can check out the website. When you do so, you can also sign up for our free daily e-letter. You'll get that safe, profitable investment information delivered to your inbox each and every day, Sunday to Saturday, for free. So make sure you do that, moneyandmarkets.com. Now on with today's podcast. You guys all know by now that, I'm pretty bullish when it comes to smart technology. Now, what I mean by smart technology, when you say tech, that's kind of a broad thing. But when I talk about smart technology, I mean things like artificial intelligence, 5G, automation, electric vehicles, and big data. These are all things that are revolutionary when it comes to technology. It's not just about computers or smartphones or things like that. It goes well beyond that. It goes beyond, it looks at the future use of technology and being smart in technology. That's why you have artificial intelligence, automation, these types of things, electric vehicles. These are all cutting edge technology type sectors that I like to look at. And I'm very bullish on it. I think there's a lot of room for them to grow. And the growth in the sector has already been relatively extraordinary. If you look at the Global X Artificial Intelligence and Technology ETF, it trades on the NASDAQ under AIQ. It's seen remarkable growth since coming off March 2020 lows. The exchange-traded fund invests in growth and value stocks across artificial intelligence, big data, all the sectors I just mentioned in terms of smart technology. And since hitting a March 2020 low during the coronavirus crash, the ETF has actually rebounded about 122% to reach all new highs as of today when I'm recording this. Now, in terms of smart technology, I kind of want to focus on big data today. The amount of data out there in the ether is tremendous. It's measured in units we can barely comprehend, and it's getting larger every single day. Think about it whenever you go to a doctor's office and you have other patients there that are there to see the doctor. And every time you see the doctor, there's new data entered. There's your blood pressure, your basic statistics, the prescriptions you get, your ailments, whatever that happens to be. All that data is entered. It's new data, and it's got to go somewhere. And so we're talking about beyond gigabytes and terabytes. This is beyond that. Gigabytes and terabytes are home use sizes. These are massive amounts of data that's out there, and the data is endless. It's not just medical; it's everywhere. But one of the big problems that that's facing big data is basically where to put it. It's all out there. Just where do you put it? There's the cloud. There's other data storage solutions. There's a lot of things out there, but the need for these solutions are growing each and every day as big data continues to expand. From data centers to hard drives in your computers. You have smartphone, the microchips and micro cards that are embedded into your smartphones and your tablets. That's all where this data goes. But as data increases, the need for more storage is ever growing. And companies that specialize in providing these data storage solutions are also on the move. Revenue generated from companies that provide these information archiving solutions are projected to jump about 48% from 2020 to 2024. That's and that revenue is expected to top near $9 billion. To give you perspective, it's only around $6 billion right now. That's a massive revenue increase in just 4 years, what amounts to about 3 years. Now, I use chief investment strategist Adam O'Dell's 6-factor Green Zone ranking system, and I found a data solutions company I believe is going to provide your portfolio with 3 times the return of the broader market in just 12 months. The company I'm talking about today is Silicon Motion Technology Corporation. It trades on the NASDAQ under the ticker SIMO, SIMO, and it specializes in designing, developing, and marketing flash controllers for solid-state storage devices. Now, there's a lot of different hard drives out there. Solid-state drives are typically the most reliable. They're the most widely used, and they're now being used in your higher-end laptops, Mac laptops, higher-end PCs. Data centers are using solid state because they're more reliable in terms of being able to keep the data stored. There's no data seepage. In the company here, Silicon Motion, also offers solid-state drives that are used in computers, embedded multimedia cards that are used in your smartphones and your tablets, Their products are used for industrial, commercial, and even automotive applications. They have a branch called Shannon that creates solid-state drives that are used by data centers to store data for governments, telecommunications companies, internet companies, and financial institutions. And we're talking about massive amounts of data. They've now expanded also into displays, rather, by offering a product that allows multiple 4K high-definition displays between a computer screen and an external display. And it's basically a USB display that allows 4K transition. And it's growing widely popular. They're used by hotels with large conference rooms, big businesses, things like that are using these types of products because of their ease of connectivity. No longer do you have to try to fumble around with screens and figure out what screen is showing what. It's basically plug and play. Very simple. Now, Silicon Motion's 2020 earnings blew the doors off previous years. The company reported net sales of $539.5 million, besting the previous year by 18%. It had a slight 6% year-over-year decline in sales in just the fourth quarter. So from fourth quarter to fourth quarter, the sales were down about 6%. But those sales were still 14% higher than Q3 of 2020. So their sales are really starting to pick up. They had kind of a weak 2019 and a start off slow in 2020, mainly due to the coronavirus pandemic. But those sales are starting to tick right back up and reach highs that they had back in 2017 and 2018. Sales of its solid-state drives and embedded memory cards were both up 40% year over year. And this was right in the midst of a global pandemic. Now, the company's board of directors also recently confirmed a quarterly cash dividend payment to shareholders of around 35 cents per share or $1.40 annually. The stock is trading ex-dividend until February 11th, until the end of trading on February 11th. So if you purchase shares before February 12th, you're entitled to get that first quarterly dividend payment. The payment is scheduled to be paid out on February 26th. As for the company's stock, it's rebounded nicely off its March 2020 lows. After hitting a March low of around $29 a share, it jumped 114% to $62 per share as of this recording. But looking at the stock chart, you can see a huge spike to the tune of 30% since late January. Now, it came shortly after the company announced its preliminary Q4 earnings, where officials said they expected Q4 revenue to come in 3% higher than its guidance high-end range of $139 million. Now, looking at Adam's six-factor green zone ranking system, we see Silicon Motion ranks green in all six factors, which is phenomenal, rare, and phenomenal. Overall, the company ranks in 93, meaning that only 7% of all the other stocks that we look at are ranking higher. It also means that we're strong bullish on the stock and expect it to outperform the broader market by at least 3 times over the next 12 months. It ranks a 99 on quality, which is huge because it's got double-digit returns on return on assets, return on investments, and return on equity. It blows the industry average away. It ranks a 74 on volatility because it's got a beta of 0.89. Now, remember, a stock with a beta less than 1 is considered to be lower in volatility, and that's a good thing. Its momentum is ranked at the 72. It traded a little bit sideways for the last several months of 2020, but again, as you can see, it really started to take off in 2021. Silicon Motion is also in the green in value at 64. It's got a price-to-earnings ratio of about 28.03. It ranks a 63 in growth as it's posted improved sales numbers in the last quarter, and it's got a 61 in size. Its market cap is just around $2.2 billion. So with a strong price-to-earnings ratio of 28.3, which compared to the rest of the industry is 62.25. So it's much, much lower, a lot less frothy than the rest of the industry. I think there's a lot of room for this stock to keep growing. It provides products that are in demand, and it's already got a solid market share for data storage solutions, meaning it's already established in the community. So they're going to have a lot of repeat customers when the need for even more data solutions are becoming available, and those are happening all the time. So you have a very short window here to jump into this stock and take advantage of that first dividend payment. Otherwise, you're going to miss out, but you will be in line for the next round of dividend payments in the next quarter. So there's plenty of room left to grow, great quality, solid uptrend. And in addition to a great dividend payment, it means Silicon Motion is definitely a stock to consider for your portfolio. Now, make sure you check out our YouTube channel. If you're listening to this as a podcast, just head over to youtube.com, search Money in Markets. You'll find our green bull and the bear logo. Make sure you subscribe. You get notified each and every time we post a new video. Now, if you're watching this on a video, maybe you want to listen to this on your phone or on a podcast syndicator, you can do that as well. We're on Apple Podcasts, Google Podcasts, Amazon, Spotify, iHeartRadio. We're global, so we've We're hitting a lot of different podcast indicators. You should be able to find us. Make sure you subscribe, get alerted every time a new podcast is released. Also, leave us a comment or review on any of these platforms. I love seeing your feedback, love seeing what you have to say, what you're invested in. Maybe you followed a recommendation we've made and you've made some big gains. Would love to hear about that. And you can do that below in our YouTube comments, or you can do that on any of the podcast indicators that you are listening to us on. If you have a question or a particular stock that you'd like us to take a look at, you can email us at thebullandthebear@moneyandmarkets.com. We'd love to do that as well. And also head over to moneyandmarkets.com and sign up for our free daily e-letter. And in it, we give you safe and sound investment information every single day of the week. So make sure you get that. Coming up this weekend, Money Markets Chief Investment Strategist Adam Odell, as well as Green Zone Fortunes editor Charles Sizemore will join me. We're going to dive into a couple stocks and let you know which one these are buy recommendations. These are ones you definitely need to get into. We're going to tell you about them coming up this weekend. Also, listen to the marijuana market update if you are on our YouTube channel, and our week ahead video that we put out at the end of the week, so you have a good glimpse of what to look for coming up in the week on Wall Street. Until then, this is Money and Markets research analyst and host of the Bull and Bear podcast, Matt Clark, wishing you all safe trading.